Welcome to Limit Up, the weekly capital market podcast. My name is Don Collins. I'm a chartered accountant and business advisor of 30 years and a partner at Findex, a leading financial advisory and accounting services firm based in Australia and New Zealand. Today I'm here with Ian Reynolds. Hi Ian, how are you?
Good, thanks.
Excellent. Doing well there in the UK?
Yeah, it's first light here and it's about 5 degrees outside, so
Wonderful.
It's going to be a warm day.
Oh, wonderful. Warm in your context, obviously. Correct. Not warm in Australia. Ian is a trader and investor, a former bank foreign exchange market maker, early investor in Bitcoin, and tech founder. Making money in stressed capital market situations is tough. A typical investment portfolio will often fail. The world is moving into really challenging times as the US tries to address their US $38 trillion in debt, contradictory fiscal and monetary policy, internal conflict, and numerous wars. And the rest of the world starts to consider a new global reserve currency, a multipolar world, and aging demographics. So how can we understand what's going on in geopolitics and macroeconomics? Today, Ian is with us with his latest press release from Siberia Capital. Ian, tell me about the cusp of economic disaster.
Yeah, it sounds like a bit of clickbait, I must admit, but I think your introduction actually really sums up where we are right at this second. We're seeing very volatile markets. We're seeing some wrong decisions not being made yet, but being thought of being made. And, I think what goes on depends on the order of things happening at the moment.
Sure, absolutely. And one of the biggest things happening at the moment is quite obviously the war in Iran and the price of oil, given the inability of all companies to go through the Strait of Hormuz. You've touched on that in your release. Do you want to talk through that a bit more?
Yeah, sure. So whatever Trump and Israel were trying to do with this war, clearly it's backfiring on them now. And all the promises he's trying to make, as always, are turning out to be not makeable, i.e. I'm going to protect all the ships going through the straits. Now can other countries do it for me, sort of thing.
Yes.
It's a long and painful path to, big trouble. And as an update, the US government just hit $39 trillion. So we must update our spiel to start with. But,
yes.
Since Iran, we've had bond yields going up sharply, which we'll go through later. The dollar has gone up a little bit, but not really that much. Consider gold is down 20% now. What happens next is critical. If we see the dollar go a lot lower, which it could do, it's going to be really, really painful for investors. Equally, if the dollar goes a lot higher, it's going to be painful for investors as well. So the US has got us into the point where you could say no one can win.
And so what would be the triggers to change the value of the dollar either way?
Well, if the Fed comes in and hikes rates crazily to support the theory that higher oil prices mean inflationary pressures, okay, they did in the 70s, but is that true now? I don't think it is. So that might get the dollar higher because investors are getting a better return on their capital. Whether they actually do that in the light of $39 trillion debt is a different matter. But we've got to $39 trillion, so you can't say there aren't some people that are not going to put money into US debt, because there are. What could move the price of the dollar a lot lower? Absolute lack of confidence in the Trump administration. Leads to a run on the world's safe asset, which could get really nasty.
But and the run on the safe asset being gold?
Being the dollar.
The dollar.
The dollar and US Treasuries. US Treasuries underpin everything in the banking system. Every deposit has some transaction to do with US Treasuries. around the
Yep.
world. So they're
Okay.
in absolutely everything.
Yep. Yep. Sorry, you did mention about gold copping a hammering. Why is that occurring, given that's normally a safe haven?
Well, we'll look at the chart and I'll show you exactly in a minute.
Yep.
But, we had a massive run up. Don't expect some pullbacks because it's going to happen. And if you've got a lot of equities, for example, and they're well underwater, some people think that selling something that is in the money to cover your
Mm,
losses is a good thing.
mm. Yep.
It's not. You should be selling what you're losing money on. But that's not what investors do in panic situations.
Yep. Yep. And so you mentioned the US dollar's risen and gold has fallen.
Yep.
What has been the main reason for that, for investors to do that?
Well, some investors are selling gold because
Yep.
they've bought it and now they need to cover some losses or just have more liquidity in their
Yep.
systems. So that might be surplus. Countries running surpluses might have gold that they've invested in and they now need to underpin capital markets. They might need to pay more money for oil, for example.
Yep.
But
Yep.
obviously, a lot of the retail crowd has been in gold and silver as well. So they're just selling
Yep.
because they're losing money.
Yep.
US dollar has strengthened a bit, 4% from the low,
Yep.
because of that very trade. So we're selling gold for dollars because we need liquidity. Therefore, the dollar has gone up a bit.
Yep. 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 Okay. And so, what's there left to be done to, it sounds like, again, we talk about a crisis every week. So, this could be a crisis for the US dollar, is what you're indicating.
Well, I think we're at a pivotal point to know whether the dollar's going up a lot or down a lot. I know that sounds silly, but
Yep.
it's at that pivotal point where something is going to happen to make one of those two things occur.
Right. So you make note there could be a really big change in global asset values.
Yep. Value of the dollar going up a lot or down a lot will change things dramatically.
Right. Okay. Interesting. Right. Okay. So Ian, can you show us how this has all been tracking in your charts?
Okay. Can you see it now?
I can see the
Yep.
gold chart now. Thank you.
Perfect. Let's go left to right as usual. So Bitcoin and the other cryptos has been holding up pretty well. This is the buy zone down here. We've had a big steep drop prior to this crisis.
Yep.
And now we've bounced, but it's not really very bouncy. And obviously
No,
is being
it
held
seems.
down by whatever else is happening.
Yeah, I was about to say it looks like it's trading with albeit bouncing, but within a range without going either way. And is that last drop when the war started?
Here, yes.
No, yes. Oh, so that's there. I was going back to February there. That's all.
No,
Just trying to figure out.
the drop from here is just Bitcoin and the change of narrative
Right.
that quantum
Yep.
computing is coming and all that stuff.
Computing. Yep. Good.
So that's the same for all cryptos, basically.
Yep.
Gold, as you can see, from non-volatile asset to uber volatile asset very quickly.
Yes.
And you can see how even the volume's really picking up as we're going up.
Mm. Mm. Mm.
And it's really going up as we're crashing down.
Mm.
So in
Yes.
reality, we've gone back to where we were with the big change that happened on the 29th of January,
Yep.
30th of January actually, where some say that the authorities came in and slammed the price of silver and it dragged everything down. But anyway, whatever happened, we're kind of still in that range, but just about hanging on at the bottom here as we hit
Yep.
4265 at the moment.
Yep.
But clearly, this is a really, really steep drop. I'm kind of a buyer
Very
about
much so.
around where we are now, and I've got an order
Yep.
in. And if we get back to the real breakdown here, which set up the big movement upwards at 3,500, I'd be a big buyer down there as well. But I might
Right.
be wrong. There might be lots of things going on here, so time to keep that stop tight to your price.
Yep.
Silver, I haven't had a look this morning because it's 6 o'clock in the morning, but as you can see, here's an even worse chart. Actually, that's not too bad. I mean, the recovery hasn't been so good as gold, but it's still holding on to that 63 sort of level that we came down to here. But it's still looking pretty nasty. But look at all those down days. You got to say there's got to be a bounce sometime, right?
Yep.
Difficult to say, of course, when you're long. So here is the dollar, the DXY. The grey channel is a very long-term trend where we've tried to go underneath it and haven't managed to until we got to here in January. And this is kind of like a support line, but you'll see that here is the resistance stopping it going up. But really, the context tells you that we're actually at a low level of a channel that's going up. So a break much lower is going to be very dangerous. These are the 3 Fed cuts, which got slightly moved out of the way there. But you can see that Fed cuts couldn't get the dollar lower. No. But it's going lower again now. So that's what I'm saying. We're at a point where it's got to work out what it's doing. Treasuries, this is the US 10-year. This is another uptrend channel, which has hit the bottom and bounced.
Yep.
And here we've gone up from 392 to 442. So we've gone up 0.5% in rates since the 2nd of March. So that will be as the Iran situation started coming up, because my flight was cancelled on the 5th of March after the bombs started hitting. So you see that actually the bond market was sniffing out all the things that were going on orally, i.e. what Trump and the others were saying before it happened. And here we go, big move up in rates. And the United States cannot afford this to go up because it's $39 trillion in debt. Stock markets, well, this is the Dow Jones. And there's not really much commentary needed on this because it's just going down. And quite the context. So, we've had a massive run up in stock markets, and here's a correction. And, we're only off like 10% or something, but 10% can very quickly become 20%. So with the S&P is right on this red line here, which is the big support area, and it's gone through. Obviously, America's not in today yet because it's 6 a.m. London time at the moment. And there's some more support here, but below this support at around 6,210-ish, you can see there's a lot of daylight to be filled in if it goes a lot lower. And this sort of reinforces what I'm saying, is that we're at a pivotal moment in that, a 10% correction, bound to happen. But, if we start going a lot lower, things can spiral really quickly. If you look at, just for the last thing, let's have a look at the monthly gold chart. So this is where it really broke out from 2000. We hit a high at 5,600. And this is a really, really ugly chart that shows that, maybe we can get the 3,500 level is down here. So I think that's pretty doable. And there's a lot of pain for retail investors that rushed in to buy bullion and stuff like that when that happens, because you can't get out of that position very easily. That's pretty much it for the charts this week.
Okay, right. So what are the things that are coming up this week then that we need to watch out for?
Yep. So we've had most of the action this week in all the central banks. So by that I mean the Fed, the Bank of England, the Bank of Japan, Bank of Canada, all had their meetings, all decided to hold rates, all said we will hike rates if we need to. So that's the wrong thing to do in this current situation, but it's not necessarily going to stop them doing it. And especially with the Fed, the rhetoric from the Fed, or should I say Powell's lawyers, to be accurate, regarding the subpoena at least that they got from the Supreme Court about the building expenses of the Fed,
Yes.
is that basically Powell is now in charge of the narrative. So whatever Trump been
Right.
kicking in for ages, Trump's made such a mess in Iran that, he might stay on for longer. This is Powell. And
Yes.
they might hike rates to stop any inflationary pressures, which would absolutely wreck the US economy. We're already seeing that
Right.
growth got
Yeah.
cut in half in the fourth quarter.
Yep.
So pretty much next week there's nothing. There's UK CPI, but that doesn't matter. But we've seen a very high US PPI numbers, EU CPI numbers even, and that's not including the price of oil because that's not in the numbers yet.
Yep. Okay. So it sounds to me like there's still a lot of pain to go through and some very crucial decisions needed to be made by the US in relation to their war on Iran for financial markets to get better. Would that be fair?
Yep. So financial markets hate uncertainty. We can deal with absolute disasters and we can deal with absolute good stories, but we can't deal with uncertainty, and everyone has to sell and go back to cash. And the longer it goes on, the worse it gets.
All right. Doesn't sound great news for a lot of people, and look forward to another catch up next week.
Yes, sounds good. Thanks very much.
So that's another wrap of this week's Limit Up podcast. This and previous podcasts can be located on the Siberia Capital website. Alternatively, you can subscribe by accessing the link at www.siberia.capital/contact. Thanks again, Ian, for your time this week.
Cheers now.
Thank you.